Good morning, everybody. Welcome to the Trading Market Technicals morning call video for Tuesday, October the 2nd. We had a clear reversal day here on a 10-minute chart of the SPY. Markets popped up with some good ISM manufacturing, 51.5, clear beat, and we just faded all day. Market rolled back down, flagged a little bit, and then sold off into the close. We did have some other good news. Spain said they were ready to seek the Eurozone bailout. That's been ongoing for several months, so it's been going back and forth. And I see a lot of the traders and investors starting to focus more on what's going on in Europe again, and putting a back burner to China, which really should not be. We need to really consider everything. Now, when Bernanke started speaking, he ended up defending his work for us QE3. And then one of the Fed governors had spoken, I forgot who it was, made a statement stating that he's looking for QE3 to extend to the end of 2013 instead of the end of this quarter. So markets got a little bit of a bump and then actually started to roll over. What does that really tell you? The markets are in trouble. That tells us that the economy is in dire straits. If he's looking to extend it to QE3 to 2013, well, the markets are in dire straits, and I think the economy is in dire straits, and that's something that we really don't want to go unnoticed, and we really want to pay attention to what happens. Now, you could be long and stay long, but we need to really be careful here. I think that something big is brewing. Who knows? Just a thought. It's nothing actionable. But we had a reversal day today. It's something that as we are topping, it is a process. We're starting to roll back down again. Now, what I would look to do, and I mentioned in the office, is that I would look to next lower high from today's close, fail of the 145.68. If we can make a lower high somewhere in this region and fail, then I think that's a good start of putting on a short and legging into a short position. So looking at your share size, if you're a 5,000 share trader, you would leg in 1,500 shares, 1,000, or however you see fit, based on your risk tolerance. But let's see what happens tomorrow. Tomorrow's going to be quite interesting. So if we could get a lower high in here, we don't even have to get up this high, somewhere in this region, up 50, 60 cents and roll out and take today's low out. And then ultimately I'll be looking for this pivotal low here of 143.51, and then of course here at 142.90, 142.95. That would really send the market down lower, and all of these stops are in place here. It's just inevitable. You could see it clear as day, and this is why we have our volume profiles, if you can see here. Some interesting possible setups I'm going to show you in the charts. So I want to get right to it. I want to get explaining to you what's happening here and what I'm seeing. Now, before that, I'd like to get into our indicators, and as you can see here, we have a NASI summation index, the weekly. Now, this is closed on Friday. All right. Now, this is a weekly chart from last week. So we had a beautiful run up. Now, this is giving us a sell signal right here, guys. So we are a NASI summation index on a weekly is giving us a sell signal. This is a very reliable indicator on the 5-3 stochastics, telling when the market's overbought and oversold. And if you can see here, look at the pattern. You can see clear as day how it marks that little top, little whipsaw here, but here, big run up with good 6 weeks here, and then of course the tops. So that's something that you want to keep an eye on for sure. Look at the VIX. VIX is up today as well, bouncing off the bottom here, these lows, off that bullish fallen wedge. And now we're starting to make a little bit of gain a little momentum. I like this again. I like to see it take this pivotal high out. This guy here, but here's this is the important. I think comes in around 18.25. So that's something that we're going to be paying attention to. Quick look at the SSEC, which is the Shanghai. Shanghai had a good 2 days, as you can see, and tonight I think it's slightly up. Tonight, yeah, actually, it is slightly up tonight, coming off of a nice move. Oversold. Deeply oversold, so it's in the cards for a bounce. We need to really get up in this area here, and then of course this area 2200 to really get momentum going. So an oversold bounce is really what it is for now. We'll take that in stride. And the dollar, and then we'll go right into the charts. Now the dollar, as you can see, is flagging, but look what happened. The dollar hit the bottom of this lower trend line and closed just above that 100 and that's the 20-day moving average. Excuse me. It closed above the 20-day moving average. Again, you're going to see some movement in the dollar, but I would suspect the dollar really start to pick up steam. If we could break out of this bear flag and somewhere around that 79 still holds true, and then start to take off and really take that 200-day and that 50-day, then you're going to have a decent pullback in the markets, and it could be anywhere from 4 to 6%. I'd love to see 8%, and then we could really buy this market up. But as of right now, we're sitting right in this corner here. So let's keep an eye on what's happening. All right, now, this is what I'm seeing. I'm seeing possible head and shoulders pattern here, and a neckline coming in at 143.45. Head, left shoulder, right shoulder, which we got today. And now we just have this little corner here. As you can see, we have higher volume, so we'll mark 2 distribution days, and we're down here at the stochastics are still not overbought. So anywhere in this region, as you can see here, we have this daily chart. I wanted to show you this. A break below that, we got this little thin zone area where the next target would be somewhere around 137.95, and prior to that would be 140.65. So look at this head and shoulders, small, but nonetheless, neckline at 143.44, and it only triggers on a closing basis below that neckline. Okay, so let's keep that in mind in case the market does go higher. We don't want to be looking to enter a short position here. I'd like to see at least take out today's low and then take out the neckline if you want to just leg in small, ever so slightly with a stop above, obviously, today's high. Okay, but again, nice little head and shoulders pattern. 30-minute chart. I always like to look at a 30-minute chart as well. Head, left shoulder. You can see it a little bit clearly. Right shoulder, and we're flagging here. So this is normal when we have our right shoulder, left shoulder. We broke the neckline ever so slightly, and then we actually started flagging. Here's the neckline again. Little thin zone pocket area here. Could easily flush down to the lower 140 area. Okay, so again, not triggered, but we want to keep an eye on this pattern. It's a bearish pattern, and it's actually at the highs here. It actually holds true. This is something I'm going to be really looking forward to, and we can really start looking to short the market here. But again, it has not triggered, so I'm not telling everybody to go out and short the market as of yet. But again, pattern, repetitive pattern, same thing. IWM, good gauge of risk. Head, left shoulder, right shoulder, bear flagging right into this area here, and your neckline here, as you can see, this area here is a little bit weaker, as you can see. We're into the neckline, flagging into the neckline. All right, bear flag. So this is something that if IWMs come off first, then I think the market will follow the IWMs. Now we do have sector rotation though, and that I mean by how if you noticed a lot of the brick and mortar, like today, the Dow was up 150 points at one point, ended up closing I think up 70 or up 65 or whatever the case may be. That's a big reversal, but still up on a day. And it looks like that the big funds are going for the brick and mortar big companies and utilities, stuff that's going to be a safe haven. And that's what's happened today. So we had some rotation out of tech and Russell 2000, which is clear as day, as you can see. And Apple got slammed today as well. So we're getting that rotation. Now, is it a rotation, or is it going to be just a pure sell-off? In a sense, we're selling good assets and bad to pay the bad assets. Right now, that's not happening. I do see sector rotation happening. So that's something that I want you guys to keep an eye on when you're doing some scans. You'll see builders are getting hit, Russell's getting hit, IWMs, which is the Russell, the KBH, the bank index. So a lot of these little areas here, they're starting to fizzle. And I'll show that to you. Here's the transports real quick. Oversold, due for a bounce. Small little wedge here. Not exactly the ideal wedge, but nonetheless, if we break out here, look for this little area, this lower trend line here, for some sort of resistance. You got plenty of resistance overhead. So even if the transports bounces tomorrow or the next day, you're going to run into resistance. I think it just rolls and retests here. Okay. Take a look at the SMH. Look what's happening here. As you can see, we're starting to flag. Again, very weak today. A lot of the big cap techs were hurting today. So this is something that I want to keep an eye out, okay? Apple Weekly, we had a great call last week. And I'm looking for, again, that area, that 660 to 645, 640-ish. That's going to be a good area of support here. So you got to use caution now that, we're down off the highs from 705. We're at 650. I like to see some sort of a flag, maybe a pivotal low, back up in the 675-80 area here, and then it gets some sort of reversal candle before we really look to start selling Apple. And if you can see, let's just dial it down to a daily chart. and we had that thin zone. And as you can see here, we have that little area, and then we have a thin zone back up in here. So we did have, underneath the 20-day, we sold off real nice today, and was just hitting that 50-day moving average. So use caution here if you're looking to sell, even though it's a $650 stock. 10 points is nothing in this stock. So just use caution if you're looking to short. I'd like to short the next lower high in Apple, and then ride it down to the 645, 640 area. That's going to be my cue. I'll be watching to do that as well. Last is the Qs, just to show you. Obviously, what Apple does, the Qs kind of follows, heavily weighted, and we're flagging here. And as you can see here, guys, really same pattern, right? Head, left shoulder, right shoulder with a flag into our neckline. So this is something I'll be watching. I personally don't like trading Qs because it's so influenced by Apple. If Apple has a good day and everything else is down, well, the Qs are not going to go much further than what the what Qs would do versus the general market. So just make sure you keep that in mind. If you're trading any index, you might want to see what the weight of the index is per stock. All right, that'll kind of give you a good assumption on how that ETF is going to trade. All right, guys, have a great day. It's going to be an interesting